Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a fantastic weekend. Last week was a great week with every single one of the best pairs highlighted closing successfully. And it does look like we're going to have another good week because the way the markets are structured, very similar to last week, it does look like plenty of opportunities are going to present themselves next week. So if we have a quick look at the economic calendar, there's not too much going on this week that we really need to worry about. We do have a speech from Powell on Tuesday, but not something we really need to plan around. Maybe we get some volatility on something that's said, but we've already had FOMC, it's out the way. We kind of understand the direction that the Fed are going, and I don't expect any major changes to come from this speech here. We have some CPI data coming out on Wednesday from the pound, so don't be surprised if the pound pairs kind of contract and then start to move on Wednesday. Pound shorts are definitely something we're going to be keeping an eye on again. They worked fantastic last week, and again, that looks to be a place where you can make money, but maybe we start to get the moves from Wednesday onwards, so just bear that in mind with the pound pairs. And apart from that, we also have a bit of inflation data out of Canada and some employment data out of Australia, but it's not anything we need to really plan for in advance, and certainly the Canadian pairs and the Aussie pairs we're going to be looking to be involved with early in the week anyway. We're not going to be waiting for those pieces of data to come out. The main thing is the parliamentary elections out of Australia this coming weekend. So if you do take positions in the Australian dollar, for example, just bear in mind there may be some gap risk over the weekend. So if you take a trade in the Aussie pairs and you have a tight stop and you go over the weekend, you may be gapped past your stop. So just something to consider. But again, nothing that changes the plan too much. We may just see the Aussie pairs being a little bit subdued leading into the parliamentary elections. However, they are not in the best pairs, although we are going to look at Aussie shorts. They're not highlighted as the best pairs anyway. So again, nothing that really interferes too much with this week's plan. Okay, so if we look at the scorecards for the coming week, and for anybody new to the video, what are the scorecards? Well, they're the macro framework, which gives us our directional bias. And then we overlay the technical analysis onto the fundamental analysis, which is these macro models. And that is what helps put the odds in our favor. And we go through that concept, in fact, in the free GMT course. For those of you who have done it, we talk about having that macro framework and then timing it with the technicals. So when we look at the scorecards this week, we can see the US dollar is still the best long position. And with a score of +3, and we compare this, for example, to the pound, which is only -2, it tells me that US dollar strength plays US dollar long position. So that could be euro dollar to the downside, Aussie dollar to the downside, pound dollar to the downside. Those are the best places, and they're going to be the opportunities that I'm going to be prioritizing in terms of making money next week. The CAD still sits at number 2. And again, CAD strength plays such as pound CAD to the downside, New Zealand CAD to the downside paid very nicely last week. And once again, they are set to be some of the better opportunities in this coming week. We're going to be paying attention to that as well. So some of the pairs we're going to be focusing on in this video today, we're going to be looking at US dollar franc to the upside. We're going to be looking at pound dollar to the downside once again. We're also going to be looking at CAD franc to the upside, and we're going to be looking at pound CAD to the downside. But outside of that, there's also a couple of other things to take away from the macro models heading into next week. And that is that the euro has weakened and the Swiss franc has weakened. So although the euro only scores neutral, it's moving from left to right. We have some momentum. And I would expect heading into next week for the euro to continue from 0, where it currently sits, into the more negative end of the scorecard. So I am going to be keeping my eye on euro shorts next week. We can also look at Aussie and New Zealand shorts for similar reasons. The New Zealand still is bearish to neutral, and the Aussie is neutral but moving down towards the more negative end of the scorecards. And so the priorities heading into next week will be US dollar longs, CAD longs, pound shorts, franc shorts, but also euro shorts, because with a strong dollar, we should expect to see the euro continue to weaken. So those are my priorities heading into next week. Those are the markets we're going to look at in today's video. And one other important takeaway here is the Japanese yen, which has strengthened from bearish to neutral. It tells us going into this week, we don't want to really be looking at those yen pairs. They could be chopping, they could be correcting. And when we look at the Japanese yen itself in the futures market, we can see what might be coming next for the Japanese yen. And so the yen pairs are off the table heading into next week. Okay, so let's start by looking at the currencies themselves, starting, of course, with the US dollar. Since we had the major breakout of the 102.992, which I wrote the thread about on Twitter, we were looking for the 104.92, and we came up last week and we took this target out almost to the pip. It was a really nice move into this target. Technically, we are still bullish in the US dollar, and this fits with exactly what we're looking at in the macro scores. And really that just underlines the fact that US dollar long positions heading into next week should be the number one priority. Any pullback as we're currently getting in the US dollar is viewed as an opportunity to look for breaks to the upside. And the next key of resistance is the 106.08. Next is the euro. I've also left the golden line on here to show the major breakout to the downside in the euro. We consolidated underneath this breakout, and last week we broke lower. And again, almost to the pip, we took out the target in the euro futures market at the 1.0376. So what I really like about the euro heading into next week is we broke out of this consolidation last week, and we have some nice momentum to the downside, and we're setting up a nice bear flag here. So any pullback in this market, possibly a retest of the underside of this consolidation, is viewed as the opportunity to look for shorts into the 1.0296. Now, what we're looking at here technically confirms this idea that we're going to be moving from neutral down towards the more negative end of the scorecards in the coming weeks. And if that's the case, you're going to see the euro declining. And it's one of the reasons why I really do like euro shorts over the next week or so, despite the fact we have a kind of neutral rating in the scorecards. Next is the pound. Last week we came and took out the target. The pound was a very good short last week. In fact, it was a top short, and we did have a really nice sell-off in the pound last week. Heading into this week, any pullback in the pound is simply viewed as an opportunity to look for further declines into the 1.2081. And as this is structured technically to the downside, very bearish, confirming our bias in the scorecards. Next is the Swiss franc. Now the Swiss franc has been selling off to the downside, technically very bearish, and we also saw it weakening in the scorecards last week. So Swiss franc shorts are absolutely one of my top priorities alongside dollar long positions next week, and I do like very much US dollar Swiss franc to the upside, which is why it's highlighted in gold here as one of the best pairs to keep an eye on next week. We took out both targets in the Swiss franc. I am now looking for a correction, possibly even a retest of the bottom consolidation. We're having this kind of stair step down in this trend, and I'm going to look further declines into the 0.9896, and that should provide very good short opportunities in the Swiss franc. Next is the Japanese yen. Now we saw the Japanese yen moving from kind of bearish to neutral territory in the forward-looking scorecards, and that's telling us to stay away from the yen. Why? Because it's now corrective, or it's projected to be corrective in the near term. And we're really trying to avoid corrective markets. We want to be involved in the markets which are going to move. So what you can see here, technically speaking, is we've had a double bottom here in the Japanese yen futures. And this is a bullish pattern, but this is a bullish pattern in an overall downtrend. And we broke the 0.0079450, which was a major breakout we covered in previous videos in the yen. And what I think we're going to see is, as the scorecards are projecting consolidation or neutrality essentially in the Japanese yen, I think that fits very well with the technicals here, essentially continuing to grind or correct higher and coming back to retest the 0.007945. So that's what I think we're going to see in the Japanese yen. However, why look to be long the Japanese yen when you have the Bank of Japan taking actions which are currently devaluing the currency, and at the same time you're trading a currency to the upside which is essentially counter trend or corrective, when we could be isolating those bigger moves or markets which are trending, such as dollar long positions. So yen pairs are off the table for me personally next week, but I wouldn't be surprised to see this pull back and retest the major breakout level here. Next is the Canadian dollar. We came down and took out both targets in the futures markets last week. And the interesting thing which I've been highlighting with the CAD pairs is the Canadian dollar is currently kind of bearish when you look at it technically. And this is why you need the macro and the technicals to go together to work out the overall puzzle. Because yes, this is bearish, but the scorecards have been showing us that we can still be long the Canadian dollar versus other currencies like the pound, like New Zealand, and we can still get paid, even though the CAD itself is selling off. So I don't like CAD long positions as much as dollar long positions for reasons discussed. However, I am still prepared to trade the Canadian dollar to the upside. But the caveat with that is because the CAD is not in and of itself very strong, I would only be taking long CAD positions against the very weakest currencies. Next is the Australian dollar. Last week we came and took out the target set at the 0.6994. I am overall bearish on the Australian dollar. You can see we're going to be looking at Aussie dollar, we're going to be looking at Aussie Cad, but I do prefer, based on the macro scorecards, pound shorts Franc shorts and Euro shorts heading into next week. The next downside target in the Aussie, you can see we're already pulling back, is down at the 0.6685. So we have quite a way to go here, and it does look like we could have some Aussie weakness over the course of the next month or so. And last but not least, we have the New Zealand dollar. We took out the target to the downside last week. New Zealand shorts were highlighted as a good opportunity in last week's video, and they paid very nicely. Again, I am looking further declines in the New Zealand dollar down to the 0.6159. However, just like the Aussie, I think there are better shorts. I prefer Euro, Franc and Pound shorts, but I will still be looking for potential shorts in Aussie and New Zealand pairs as well. Okay, so let's look at the markets themselves, starting with crude oil. I do have a target of the 113.88, and I think there's a very good chance this target gets taken out next week. So any pullback in crude oil is going to be viewed as an opportunity to look for bullish setups into the 113.88. This is also going to aid or support any of those commodity currencies which have crude oil as one of their major exports, such as the Mexican peso, such as the Norwegian kroner, and also the Canadian dollar. So this fits in nicely with what we're looking at here in terms of near-term CAD strength next week. Next is pound dollar. Pound dollar was highlighted as my favorite short last week, and we had a really nice sell-off to the downside. We broke through the target at the 1.2252. Heading into this week, this is once again one of my favorite setups. We're starting to pull back now, and any pullback in this market is simply viewed as an opportunity to look for bearish reversals down to the next key of support to the downside at the 1.2081. Next is US dollar Swiss franc. We took out both targets to the upside last week. So what I'd like to see in US dollar Swiss franc coming into this week, because we're so close to the target, if we pull back, we haven't taken it out yet. Any pullback before taking out this target will be viewed as an opportunity to look for long positions into the 1.0049 and then onto the 1.01260, which we may achieve next week or the week after. But because we're so close to this target, if we come and take out this target first and then pull back like this, you can take this target off and just look for the second target at the 1.01260. Next is euro dollar. Euro dollar was a market we were looking at to the downside last week. I highlighted the fact we had corrected and retested the major breakout level, and then we had a really nice sell-off towards the end of the week. Going into this week, we haven't taken out the target yet, so any pullback in this market will be viewed as an opportunity to look for shorts once again into the key area of support and the target set from last week at the 1.0341. And if we come and take out this target first perhaps and then pull back, or if we just break straight through here, we're going to be looking down towards target 2 at the 1.0260. Next is New Zealand dollar. Last week we came down straight through the first target and we finished the week here at the second target. I am looking for further declines in the New Zealand dollar. Any pullback as we currently are getting here is simply viewed as an opportunity to look for bearish setups into the 0.6158. Look at the gap between these two levels here. If we break the 0.6158, we could be coming down to the 0.5996 pretty quickly. And when you put that into context of the major DXY breakout, I question whether we're going to start to see an acceleration of the DXY breakout in the coming weeks or month or so. But just in the short term, I'm looking for the 0.6158 next week in New Zealand dollar. Aussie dollar, we took out the target last week at 0.6988. I do view this pullback currently as an opportunity to look for bearish reversals, and we're going down to the 0.6812 in all probability next week. I do think there's a very good chance this target gets taken out next week. So not one of my favorite shorts, but certainly an opportunity I'm going to be keeping my eye on, because if we get a really good setup, that appears I wouldn't mind shorting this market as well. Okay, so moving on to the CAD pair, starting with pound CAD. This was a short from last week. We came back and we had a really deep pullback. This was great because this allowed us to short up in this area down to the target. We didn't quite achieve the target, but I do expect this target to be taken out this week. So for anybody not involved from last week, any pullback in this market is once again simply viewed as an opportunity to look for shorts into the 1.5737. And once we break through here, going to be looking down towards target 2 at the 1.5576. Next is CAD Franc. I really like the look of CAD Franc going into next week. We have some nice momentum to the upside after this near-term breakout. Any pullback in this market before taking out this target is absolutely going to be a great opportunity to look for bullish setups. And I'm going to be looking up towards the 0.7791. Next is EurCad. Now, although EurCad is ordered here as the third one, there are other macro models that really flag this currency, and this is really going to be a currency I'm going to be paying attention to for further declines. We've had a really nice sell-off, and any pullback in this market is going to be the perfect opportunity to start to look for bearish setups, bearish reversals, down to the next key support to the downside, the 1.3249. It is a little bit of a distance. Maybe this takes a couple of weeks, but there's also a good chance we could come down to here next week. Either way, I'm definitely going to be keeping my eye on this pair for short opportunities next week. New Zealand Cad. This is a market highlighted to the downside last week, and I said that there's a very good chance we come down to the 0.8016. This was actually the major target from last week, but because there was such a gap between the two key targets, I put a conservative minor target of the 0.8150, and that was taken out last week. With that gone, I am now looking towards the next key target to the downside. Any pullback in this market, and again, you can see the momentum we have coming in here. This is great. Any pullback is viewed as an opportunity to look for shorts into the 0.8016. And last but not least is Aussie Cad. We have a really nice bear flag setting up in Aussie Cad to the downside. Any pullback in this market is viewed, all things considered, as an opportunity to look for bearish reversals into the 0.8888. Now, even though the Aussie and New Zealand pairs here aren't highlighted as the best pairs, they still look very good going into next week. And I would not be surprised at all to see the Aussie-New Zealand pairs taking out their targets or closing successfully in the direction highlighted here next week. Okay, so wrapping up the video with gold, silver, and Bitcoin. We're looking here at the gold-silver ratio. We took out the target at the 85.45. Now, I'm not looking to trade the gold-silver ratio, but what this does is it helps us identify the best short or long out of gold and silver. And as I've said previously, I would much rather short silver than gold, but they are both shorts. But as you can see here, I would be looking for the gold-silver ratio to continue higher, and so silver remains a better short, in my opinion, out of those two. Okay, starting with gold, I am bearish on gold, and we took out the 181494 last week, and that was pretty much the move in gold last week. I am still bearish. Any pullback is simply viewed as an opportunity to look for short positions, and I do think there's a good chance we come down to the 1780.35 next week. Next is silver. Now, last week we took out both targets to the downside, and silver was highlighted as a best short last week, and this was a great market. Going into this week, I've left target 2 from last week, the 2145 on there, and I've turned it gold. Why? Because this is a major breakout in silver. I tweeted out that this was a major breakout, and this was a market we could add to the list of major breakouts vis-a-vis the US dollar. You can see, in fact, if we zoom out to the monthly chart, this is a large double top reversal pattern, and there's really nothing but air between where we currently sit and the 1966, which you can see has been tested multiple times in the past. And I would expect, you can see when we break this level, we usually come down to here. I would expect to see the 1966 now in silver. And so going back to the 4-hour chart, any pullback next week, and I would be looking for a retest of the major breakout level of the 2145, will be viewed as an opportunity to once again look for shorts into the 19.66. And silver once again is highlighted as one of my favorite markets going into next week. And last but not least, we have Bitcoin. Bitcoin was highlighted as a short last week, and I said in last week's video, Bitcoin is in trouble, and you can see why I said that. We had this major breakout below the 32,935, which is why this is highlighted in gold, and we took out the target. In fact, my targets in Bitcoin were far too conservative last week. We came much, much lower. So going into this week, I would be looking for a pullback. We've already started to get it, but any continued pullback towards the major breakout level of the 32,935 is viewed once again as an opportunity to look for shorts. And I think there's a very good chance Bitcoin comes down to the 24,307. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.